Hey everyone, today we need to talk about something really big, something that could fundamentally change how money works for all of us. President Trump just launched a new plan to tackle the $39 trillion debt crisis facing the United States. And no, it is not about backing the dollar with gold. It is not about backing the dollar with oil either. This new plan is about backing the United States dollar with crypto. I know. It sounds a little wild, but let me break it down for you. The value of money, any money, really depends on whether people believe it has value. Think about it this way. If I go into a really rural, isolated country where no one has ever seen a US dollar bill before, and I try to buy some food with it, they are probably not going to give me any food. They do not know what this piece of paper is. But if I walk into a Chipotle here in the United States and try to buy food with the same dollar bill, they will happily take it and give me food. So money has more value when more people believe it has value. If people all over the country believe it has value, it gains even more value. And if people around the entire world believe it has value, it becomes incredibly powerful. Our money system has gone through a lot of changes over the last century, and it is on the brink of another massive transformation. You might be surprised to learn that the United States dollar was not always the world's reserve currency. It actually earned that title in 1944, right after World War II. This had two major implications. First, it meant that most international trade happened in US dollars. And second, countries worldwide started saving their money and their wealth in US dollars. Being the world's reserve currency brought a huge amount of value, trust, and power to the United States dollar. But that is not the only reason the dollar was so strong back then. The other big factor was that the United States dollar was backed by physical gold. This was a crucial point because it meant the United States government and the Federal Reserve Bank could not just print more money whenever they wanted. They needed to have enough gold reserves to justify any new money printing. The dollar's value was directly tied to this precious metal gold. However, that temporarily changed on the 15th of August, 1971. That is when President Richard Nixon made the pivotal decision to take the United States dollar off the gold standard. He stated, "I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States." Here we are, more than 50 years later, and we are still temporarily off the gold standard. After the dollar was decoupled from gold in 1971, many people became quite concerned. If there was nothing tangible backing the United States dollar, how could it truly maintain its value? After all, it was just pieces of paper. So in 1974, another significant deal was struck, this time between the United States and Saudi Arabia. The agreement, often referred to as the Petrodollar Agreement, essentially stated, hey, Saudi Arabia, you are going to sell all your oil in United States dollars, and you are going to ensure that every country around the world has to buy oil using United States dollars. This was designed to maintain value, power, and trust in the United States dollar. In exchange, the United States promised to protect Saudi Arabia. This petrodollar system worked for decades, giving the dollar another layer of indirect backing and global demand. But that started to change and show cracks. In 2023, I put some question marks here because history is still unfolding, and we will see the full impact over the next 10 years or so. But the shift began in 2023 when Saudi Arabia started selling oil not in United States dollars, but in Chinese yuan. This was the first time we had seen such a move in about 50 years. Naturally, this raised a lot of eyebrows and concerns. If the United States dollar is not backed by gold, and now people are starting to buy oil with the Chinese yuan instead of the dollar, what does this mean for the dollar? Will the dollar collapse? What will this mean for inflation? How can we protect ourselves? This is precisely where President Trump's new plan for the United States dollar comes into play. Not backing it with gold, not with oil, but with crypto. Now, I understand that the idea of a crypto dollar might sound absolutely outlandish to some people, but we are already seeing elements of this happening. Believe it or not, a single crypto company already owns more United States government debt than 19 countries around the world combined, but there is more to it. In 2025, President Trump signed an executive order establishing cryptocurrency as a strategic government reserve asset. And the third and perhaps most significant development is a law called the Genius Act, which is set to come into effect in January of 2027. What this Genius Act mandates is that stablecoins are required to be backed 1-to-1 by United States treasuries, meaning United States dollars. This is almost like how the United States dollar was once backed by oil, but now we are seeing laws that require these cryptocurrencies to be backed by the United States dollar. But it goes even deeper than that. By the way, this whole shift is one of the key reasons why on the 16th of June 2026, I am hosting a live, free, and virtual investor workshop. Our economy is changing, investments are changing, and money is moving in entirely new ways if you want to understand how you can better position yourself for retirement in an age where money is changing. Artificial intelligence is changing technology, and our economy is evolving so rapidly. This Live Investor Workshop will show you how to capitalize on these changes and hopefully grow your wealth even faster because of them. I will be sharing some new research that my firm has put together. So if you are an investor and you want to see how you can use all these changes to your advantage, I invite you to join me for free, live, and virtually on the 16th of June. I am doing it live at 12 noon Eastern Time. Just to be clear, there is a limited number of people that can join me live on this workshop due to our software limitations. So if you are interested, I strongly encourage you to register soon and mark this time and date on your calendar. If you are an investor and you want to see how you can use these changes to your advantage, join me on the 16th of June for my live investor workshop for full transparency. Let me actually read you exactly what the Genius Act says from the White House website. Take a look. The Genius Act requires 100% reserve backing with liquid assets like United States dollars or short-term treasuries and requires issuers to make monthly public disclosures of the composition of reserves. That means every digital dollar in this system is legally required to hold United States debt. Here is how this works in practice. The United States government primarily has one source of revenue, and that is tax dollars from taxpayers. In 2026, it is estimated that the government will collect something like $5 trillion from taxes. Well, then the United States government goes out and spends money. They spend money on things like Social Security, healthcare, infrastructure, and the military. The problem is we do not run a balanced budget. In 2026, the government is not going to spend $4 trillion or $5 trillion or even $6 trillion. We are projected to spend something like $7 trillion. That creates a significant gap, a deficit. To make up for this deficit, the United States government then has to go into debt to borrow that money. This is where things start to get really interesting because there are three main lenders of money to the United States government. Number one are private people and institutions. This includes individuals like you and me who lend money to the government in exchange for interest, and also private banks and institutions that lend money to the government. Number two are foreign governments. These are countries like Japan, the United Kingdom, and China, which lend money to the United States government. And then number three is the Federal Reserve Bank. The Federal Reserve Bank is the central bank here in the United States. They are not really a bank in the traditional sense because you cannot go there to deposit money. They are not a reserve because they are not sitting on any cash reserves, and they are not even truly federal as it states on their website. They simply have the ability to print money and lend it to the government if the government cannot borrow enough money from other places. What we are seeing happen is that more and more foreign countries are not buying as much United States debt. For instance, China has become a net seller of United States debt. We have also seen economic issues in Japan leading them to say, you know what, maybe we will not buy as much of this United States debt. And when it comes to private individuals, more and more people are saying, you know what, I am concerned about inflation. I am concerned about the United States government's ability to continue covering all of the $39 trillion of debt that we have. So I do not want to lend as much money to the United States government. So there have been growing concerns about how the government will continue borrowing an infinite amount of money. And this is where, as we are talking about, we are starting to see these cryptocurrency companies being legally required, to lend money to the United States government. That is why we have seen private cryptocurrency companies like Tether now become one of the world's largest owners of United States debt. And yes, you bet that this poses some risks, which I will talk about in just a minute. Now, here is where all of this ties together. It is not a new phenomenon for the government to debt to fund all its spending. However, the United States government's ability to carry this debt really depends on how much value the United States dollar has. Back in 1944 to 1971, when the dollar was backed by gold, it had more inherent value, so people felt more comfortable loaning money to the United States government. When it was backed by oil through the petrodollar system, people thought, you know what, I am not worried about inflation. I am not worried about the government paying back their debt because the whole world buys and sells oil in United States dollars, so I will continue lending money to the United States government. Well, now, as we are starting to see changes in the petrodollar system, as we are starting to see certain countries buy and sell oil, not in United States dollars, some people in countries are saying, you know what? I do not want to lend money to the United States government. I do not want to hold on to these dollars because I am concerned about this. I am concerned about the value. And this is where the United States government is now legally requiring that these cryptocurrencies have to hold on to this United States debt. They must lend money to the United States government. Well, what does that accomplish? It ensures that when the United States government spends money they will continue to find lenders. Could you imagine if the United States government went out to spend money and they could not find any lenders? If the United States government said, we need to go out and raise $1 trillion, and there is not that money out there, that could create a major crisis, not just for the United States, but for the entire world. Because we are the world's reserve currency, and this is what the United States government is saying, that these cryptocurrency companies are now legally required to lend money to the United States government. And this is where things get really interesting, because if you ask the Trump administration, they are expecting that the largest lenders to the United States government in the future are not going to be foreign governments. It is going to be private cryptocurrency companies. Let me read you a tweet directly from Scott Bessent, who was a Treasury Secretary to the Trump administration. He says, recent reporting projects that stablecoins could grow into a $3.7 trillion market by the end of the decade, meaning 2030. Let me explain what that means in plain English and put it into perspective. The Treasury Secretary of the United States is now suggesting that because of this new law requiring these private cryptocurrency companies to own this United States debt, He anticipates that these cryptocurrency companies are going to own about $3.7 trillion of this debt to the United States government by the year 2030. To put that in perspective, today the largest foreign government lender to the United States is Japan. They are one of the largest lenders to the United States government in general, and they own about $1.2 trillion worth of United States debt. We are talking about more than 3 times more than the largest foreign lender to the United States government today, coming from cryptocurrency companies. So you can start to see now how the United States government is beginning to lean on these cryptocurrency and these stablecoin companies to now back and give value to the United States dollar. Yes, that does pose some concerns as well. But before I talk about the concerns, let me talk about the benefits. Because if there are more buyers of United States debt, that continues to give value to the United States dollar. And that helps preserve the United States dollar as the world's reserve currency. That allows the United States government to continue spending money they do not have. It allows us to manage inflation. Even though inflation is a problem in the United States, you can only imagine how much worse it would be if we did not have value in the United States dollar plus. We are starting to see more and more countries around the world use the United States dollar indirectly because many countries are using stablecoins. Even if they are trying to move away from the United States dollar, these stablecoins that they are using are backed by the United States dollar, which means it is not just the United States using the dollar, it is many countries around the world using the dollar indirectly through these stablecoins that are backed by the United States dollar. For example, Russia is trying to move away from the United States dollar, but they have been using stablecoins backed by the United States dollar. Likewise, Venezuela experienced hyperinflation, their currency was destroyed, and so their citizens are now saving their money in stablecoins backed by the United States dollar. So we are starting to see more countries and people around the world use the United States dollar without directly using the physical dollar by using this cryptocurrency. All of this is good for the United States dollar. All of this is good for people in the United States because that means your paycheck has more value. That means your savings have more value. Why? Because people around the world need the United States dollar. That brings more value to the United States dollar. That gives more power to the United States dollar. And that means less inflation on your dollar. Now, I get it. Inflation is still a problem, but it could be a whole lot worse if people did not have value, trust, and belief in the United States dollar. But now, the thing that I have been talking about, if we have this amount of United States dollars in debt being held by some private cryptocurrency companies, could that not pose a threat? Because just like how these cryptocurrency companies are now legally required to hold the United States dollar, if something happened to these companies, if they stopped, if they started dumping the dollar, could that not collapse the dollar? Well, here's what you have to understand. These stablecoin companies like Tether and Circle, they are not banks, so they are not regulated the way that banks are. They are not a part of the United States government. They are not federal. They are these private cryptocurrency companies, and not just that, they are also extremely profitable. Tether is one of the most profitable companies in the world, and because they are global companies, not United States companies, they are also regulated not solely in the United States. Here is why that is so important. You have heard me say this multiple times on my YouTube channel, that the Federal Reserve Bank is not a bank, it is not a reserve, and it is not federal. It says so on its website. And a lot of people have had issues with the Federal Reserve Bank being a private organization, but it is still kind of overseen by the United States government. Well, now we have truly entered a space where we are privatizing the money creation process, because now the money creation process and this lending is happening not by the Federal Reserve Bank so much, but by these private cryptocurrency companies. So we are truly moving into a private money creation process. And the concern is what happens if things go wrong, because we have seen things go wrong with stablecoin companies in the past. In 2022, do you remember Terra Luna, where $60 billion worth of value just essentially vanished in a matter of 3 days? Now, yes, that was different than here because it was not backed by the United States Treasury, but you can start to see the concerns that if something were to go wrong, that now has an impact not just for that private company and the holders of the stablecoin, but now it can impact the entire United States dollar and the entire global reserve system. Now, if you are wondering how these cryptocurrencies make so much money, here's how it works. You go out and you buy these stablecoins at a company like Tether, they take your $100, and then they go out and they buy this United States debt. The government is then going to pay them, let us just say 4% a year in interest, and then they are going to issue you a United States dollar-backed cryptocurrency. So you give them $100, they lend that money to the United States government, the government then pays Tether 4% a year, and then they are going to give you 100 of these stablecoins. So they generate interest on every dollar that they have in stablecoins, and that is how they have become so wealthy. This is why your financial education is so important, because the Genius Act is signed into law, but the implementation rules are going to go into effect in January of 2027, and you bet that this is going to create investment opportunities. Now, I cannot tell you what to invest in. Investing always has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But